everyone. I am presenting my second lecture on basic terms in accountancy. First thing, I thank you for like and subscribe my first video. So I hope so. Second video also like you. Okay, let us start the second lecture on basic terms in accountancy. Agenda of the second lecture is meaning of asset and liability. Second one, types of asset and liability with examples. See, what is the meaning of asset? An asset is a resource that has some economic value to a company and can be used in current or future period to generate revenues. We all are invest the money or our asset for the future profit. That's why asset is very important to us. And next one, types of asset and its classification. There are three types of assets and its classification. First one, convertibility, and there are two types. First one, current assets. Second one, fixed asset. Second type is physical existence. Physical existence, first asset is tangible asset and second one is intangible asset. Third one, usage. In usage, the first type is operating asset and second one is non-operating assets. See, next one, convertibility. In convertibility, the type of asset, first one is the current assets. What is current asset? The current assets are assets that can be easily converted into cash and cash equivalents. Current assets are also known as a liquid asset. Current assets are very useful for the profit making in the business and our daily life for the every organization and firms. Then next one is examples of the current asset. See the first picture of cash. We invest the cash into the bank. Then second one is cash equivalents. Cash equivalents are the very important for the on the profit. Then short term deposit. We invest the money, we invest the cash for the short term period is known as a short term deposits. Then see the picture of coins. Second picture of the coins. We invest the cash, coins, and then see the plants growing on these coins. These all pictures are show the what to how to earn the future profit through the cash equivalent and investments. Then short-term deposits. Account receivable. Account receivable, it means we receive the money and cash through the different transactions. Inventory. Inventory also known as a stock. We invest the money. We invest the money in stock for the future profit. Then marketable securities. Marketable securities are also important for the our business. Then office supplies. Office supplies can be related to offices. Then it is an office department. It is very important. Next one, convertibility. Second, assets. It's known as fixed or non-current asset. Fixed asset or non-current assets are assets cannot be easily and readily converted into cash and cash equivalents. Fixed asset. See the picture. These all are the fixed asset, examples of the fixed assets. Okay. See car, house, buildings. Then it cannot be changeable every day. It's known as a fixed asset. Fixed asset have its individual existence. Then see in next slide examples of the fixed asset. Land. First picture, is related to land. Second one, building. Third one, machinery, equipments, patents, and trademarks. Land. Land, we can see the land. We touch the building, then we can see the machinery, equipments, patent. Every company has their own patents and trademarks, which are very important for the business and the transactions. Then next one, third asset. Third asset is tangible asset. It is a third tangible. It is a third asset of a physical existence. They have a physical existence. We can see, we can feel. It's known as a tangible asset. See, tangible asset are assets which physical existence. We can touch, we can feel, and we can see them. It is known as a tangible assets. Then next one, see the examples of tangible asset: land, building, machinery, equipment, cash, office supplies, inventory, marketable security. These all are the our tangible asset, because we can see, we can touch, we can feel, and our every work is depend on this all assets. It means we invest the cash in that kind of a tangible assets. Then next one, intangible asset. The fourth type of a physical existence is an intangible asset. Intangible asset are that lack physical existence. It means that kind of a asset do not have any existence. See, brand, goodwill, trademark, patent, knowledge. We give the teachers give the knowledge to the students, but they can't see them. Then patent, trademark, goodwill. That kind of a assets known as a intangible asset. And see examples of intangible asset: goodwill, patent, brands, copyrights, trademarks, trade secrets, license and permits, corporate intellectual property. That kind of intangible assets are very important for the business organization and firms. Everybody have maintain a secret related to this asset, intangible asset. Then next one, usage. There are two types of the usage. First one, operating asset. What is operating asset? Now, if assets are classified based on their usage or purpose, assets are classified as either operating assets or non-operating assets. Operating assets are assets that are required in the daily operation of the business. It means we recorded everyday transaction into books of account. It is very easy to understand the everyday transaction. Then see the examples of operating asset. First one, cash. Second one, account receivable. Then inventory. Inventory means stock. Building, machinery, equipment, patents, copyrights, goodwill. These all are the examples of the operating assets. And operating assets are play an important role in the business organization and companies. Then next, second type is non-operating assets. Non-operating assets that are not required for daily business operations but can still generate revenue. Non-operating assets are not required for daily business, but it can be very important for the generator everyday's revenue. Then let us see the examples of non-operating assets. First one, short-term investment, marketable securities, vacant land, interest, income from a fixed deposit. These all are the very useful for the future revenue or everyday's revenue, monthly revenue. We earn the cash from this asset, non-operating asset. Then see next one, meaning of liability. What is liability? A liability is something a person or company owes, usually a sum of money. Liabilities are settled over time through the transfer of economic benefit, including money, goods, or services. Liability also play the important role in the balance sheet. See examples of a liability: bank loan, account payables, mortgage, deferred revenues, bonds, warranties, and accrued expenses. Bank loan, we taken the loan from the other bank for our business purpose, and it is very necessary for the manufacturing the goods. Then revenues, deferred revenues are also play the important role. Bonds also play the important role. Warranties also are the very important for our business. Then let us see the types of liability. First one, current liabilities. What is current liability? Current liabilities, also known as a short-term liabilities, are debt or obligations that need to be paid within a year. Current liabilities, we pay the money in a one. It depends on the time, month. We taken the credit from the another person or the another firm for 2 months, 3 months, and we purchase the goods on a credit basis, and these transactions are included in the current liabilities. Then let us see the examples of current liability: account payable, interest payable, income tax payable, bills payable, bank accounts overdraft, accrued expenses, short-term loans. These all are the known as the current liabilities. And the second type of a liability is non-current liabilities. What is non-current liabilities? Non-current liabilities are also known as long-term liabilities, are debt or obligation due in over a year's time. Non-current liabilities for long-term liabilities, and it is for the period for the 2 years, 3 years. Then let us see the examples of non-current liabilities. First one, bond payable. See the picture of bond payable. Second one, long-term notes payable, deferred tax liabilities, mortgage payable, capital lease. These all things are important for the business, and it's known as the non-current liabilities. Then third one is contingent liability. What is contingent liability? Contingent liabilities are liabilities that are may occur depending on the outcome of a future event. It is an outcome. In our business, important thing is we invest the money, we taking the loan from the other, but our profit, we earn the profit from our business. It is our outcome from the future, and it is very necessary for the business. So contingent liability also included in the liabilities, and in balance sheet, contingent liability do not show in the transaction. See examples of contingent liability. First one, lawsuit product. Second one, warranties. We taking the guarantees, warranties from the companies related to our electronic gadget, then clothes, and lots of things. Then lawsuit products. It's known as a contingent liability, and it is a example of a contingent liability. Thank you for watching my video. If you like my video, So subscribe and like it, and your queries related to basic terms, you write in a comment. Thank you everyone.